Hello and welcome to the RANsquawk wrap-up video. So we're just going to take a moment to answer a couple of questions that you've sent into the desk this week. So the first thing we're going to focus on has been earnings season. So it was the second week this week and it was largely centred on financial stocks. We did have Goldman's, these were one of the key numbers to report. They had a beat on their headline EPS. Their shares did pretty well for the week. We also saw some pretty decent results from the likes of Bank of America and Morgan Stanley as well. They were both reported yesterday and their headline numbers coming in above analyst expectations. Looking back on Tuesday, we had Citigroup. They showed a bit of a miss and their shares were down quite firmly. However, Wells Fargo outperformed once again. They had a penny beat on their EPS and their shares did very well. Last night we had some notable tech names reporting. In particular, we had IBM. They had a pretty solid earnings report last night. Their shares were up around 3% today. However, the big news for the week came from Google. They had a quite distinct miss on both their headline EPS and on their revenue as well, and their cost per clicks were down around 8%. Their shares were down around about 8 or 9% in today's trade, so pretty much a disastrous report for Google there. So looking forward to next week, we have some fairly key names reporting, particularly out of Dow stocks, likes of McDonald's, 3M and Caterpillar all reporting. We also have earnings from Johnson & Johnson. Perhaps the most keenly awaited earnings next week come from Apple. Current expectation on their Q1 EPS is just above the $10 a share mark. We'll also be looking out for how they do in terms of their iPhone, iPod and iPad sales as well. In terms of what we've seen this week, in terms of economic data, it has been relatively light. One of the big things that we have focused on this week has been the Greek PSI talks, so it's still yet to be fully concluded. We'll be keeping a firm eye out over the weekend for any resolutions. Some of the items that are still to be firmly concluded are the size of the coupon, the maturity date and the size of the haircuts on offer. So the size of the haircuts is likely to exceed 50%, and the coupon being touted around the 3 to 4% mark. We also heard today some talks about a potential 30-year duration for the bonds. Elsewhere, looking forward to next week, we have a couple of key pieces of data. The first up will be out of the UK, their advanced GDP figure. So the current consensus is for a negative reading of minus 0.1%, however the year-on-year figure is expected around 0.8%, so this will mark a quarterly contraction for the UK, so this will be keenly awaited. That's reporting on Wednesday at 9:30 London time. And then on the very same day, out of the US, we have the big figure for the week. We have the FOMC, that will be the rate decision that is widely expected to be kept on hold at 0.25% in terms of what we expect from the Fed. They're likely to announce the changes to the Fed's communication policy, however they're not expected to make any drastic changes in terms of the Fed's stance. One thing that some analysts may potentially look for is any extension to the Fed keeping their rates extremely low. Current expectation is for around mid-2013. There's a distinct possibility that this may well be extended slightly. And this is going to be on Wednesday evening that we look forward to this FOMC statement. So that's it for us for the week. We hope you've had a great week and we'll see you again on Monday.